Micron, potential for a breakout, you think, or is it going to get slapped back down?
Well, I think from a technical standpoint, the stock is in no man's land. And, when you look at something like that here, you look and say, boy, this thing can move 15, 20 bucks, in my opinion, either direction, depending on not just the report, but obviously guidance here. So I'm actually putting on a position here that looks for a big move in either direction. So what I'm going to do, Oliver, and just hang with me here for a second, because it's a little bit more complicated than just a normal trade that we talk about.
Wake me up.
So, okay, excellent. So I'm going to do what's called either a double calendar or a strangle swap. But let me break this down. On the downside, my target is 95. So what I'm going to do is I'm just going to buy a calendar put spread. Sell this week's 95 put, buy next week's 95 put. Optimally, what would happen in that scenario? Earnings come out, stock trades down this Friday, close to that 95 area. It could be 97, 98. So this week's option basically disintegrates and goes to zero. And next week's put that I have increases in value. Now, I'm also going to do the same thing to the upside, because for me, it's really a toss-up which direction this stock is going to move. So on the upside, I'm going to do a 130 strike call calendar. Same concept as the 95 put calendar on the downside, 130 on the upside. Optimally, what would happen? Stock rallies upwards close to 130, could be 125, somewhere in that range right there. This week's 130 strike expires, worthless. And then next week's 130 strike that I have as a long option increases in value. So this strategy, this double calendar, this strangle swap, whatever you want to call it, what we're really looking for is a big move in either direction, close to one of those two strikes. Now, the benefits of something like this is I can only lose what I pay for this, even if the stock doesn't move, or if the stock has a blowout one direction or the other. Let's say the stock goes to 70 bucks or 150 bucks, okay, way beyond the strikes. I can only lose what I pay for this, and I'm paying 75 cents to do this. The goal in this, just like it is in any calendar trade that somebody puts on, is for the short option to expire worthless, and then we have the long option, which hopefully has increased in value. So that's what I'm doing here, because I really believe that Micron really is set up for a big move, one direction or the other.
Fun. I indeed like this. So you're happy if it hits 95, you're happy if it hits 130, right? Those are the two sweet spots?
Those are the two sweet spots, but honestly, if this stock is anywhere between, on the downside, let's say 90 to 100, on the upside 125 to 135, this is going to be a home run trade. It doesn't have to exactly go to those strikes. Those would be the peaks if they went right to those strikes, but anywhere in that range would be optimal. And I really like this, because I think that this is very inexpensive, and it's inexpensive because of the implied volatility, because of so much option premium being priced into this week's options. I'm able to sell that and buy next week at a much, much cheaper implied volatility.
Boy, it seems like, as far as options trades go, and just trading in general, it seems like a pretty good probability combined with payoff, a uniquely good one, because you got a wide range of outcomes that you're pretty happy with. There's a timing element to it, right? So you want it to happen, later than sooner, correct? So you got to stick with it.
No question. I mean, the worst thing that can happen for a trade like this is the stock doesn't move. We come in, earnings come out, we come in tomorrow morning and the stock is still trading, 105 to 115 range, somewhere where it's at right now. That's not good, because then all of the options are going to disintegrate really quickly, including my long options. So I really need the move, but either direction would be fantastic.
Okay. All right. I like the trade. Only 75 cents, too. So it seems like a decent stab from Micron, especially with the chart setup that kind of suggests that Broadcom type thing, where if it gets through resistance, then it could bring on a wave of buyers to really rip